video change that for you. Today I'm going to be sharing with you my full profitable trading strategy that you can go away and replicate for yourself. Hi everybody, and welcome back to another video. Yes, in this video I'm going to be walking you through step by step this trading strategy that netted me 20 risk to reward in this one single trade. So let's begin. With this trading strategy, there are 6 fundamental steps. We have market structure, we have the concept of liquidity to take, followed by liquidity to target, order block, lower time frame confirmation, and weak structure. Let's go through each of those one by one, and then let's use them to get into a profitable trade. Market structure. Now, as we all know already, simple market structure looks like this. This is an example of bearish market structure, where essentially price is making a series of lower highs, meaning this high right here is lower than the previous high, and lower lows, meaning this low right here is lower than the previous low. And there we have a break of structure. And so when price breaks structure in one direction, that's the direction that the market is trending in. So in this example, market is trending downwards. That is what we call bearish market structure. Now, you've probably seen that, but have you ever heard of multi-time frame market structure? Multi-time frame market structure goes a little bit deeper than typical market structure. You see, with this same market structure, did you know that on lower time frames, there is a fragment of what we just experienced right there that looks something like this? This is what market structure would look like on the lower time frame. So in black, we have our higher time frame, and we know that price is bearish, as we can see right here. But in blue right here, we can see that price is bearish right here, bearish, and then price shifts bullish. Now, when the lower time frame market structure shifts bullish, when the higher time frame market structure is bearish, that simply means that market structure is coming for a pullback. And then at some point, as we see here, internal structure, meaning the lower time frame structure, will shift back to bearish. And that is when we know that price is ready to go and put in a new lower low. And this right here is exactly what we use to get into trades. And we'll explain that a little bit shorter. So there is essentially market structure. Now let's look at the concept of liquidity. And more importantly, liquidity to take. Let's give an example of market structure. Price goes down, price sits something like this, and then essentially price makes a lower low, price comes back up, does something like this, something like this. So liquidity to take. Now let's say price puts in a break of structure. So when price breaks structure, like so, to the downside, we are ranging from the current high and the current low that broke that market structure. Now, when we get into order blocks, this is what we'll get into. So essentially, liquidity to take and liquidity to target is that from the low to the high, when price is coming back for a reversal, for a pullback, let's say there is an order block in here, which we will talk about in a moment. This order block right here needs to have liquidity to take and liquidity to target. So in this situation right here, we have equal highs. That right there is our liquidity to take. Liquidity to take on the way up to the order block. And then we need liquidity to target. And as you can see here, we have equal lows right down here, which is our liquidity to target. So now we can expect price to run one side of liquidity, taking out all the stop losses and all of the buy stops, and then taking out the second side of liquidity, triggering all the stop losses and the sell stops. And then price will essentially come back, take out the stop losses from here, and then continue to the downside. And that is essentially what liquidity to take and liquidity to target looks like. And order blocks. If you haven't watched our order block video yet, you can go ahead and watch the order block video where we go deep into essentially what is an order block. But for those of you who know, well, simply put, there are supply and demand at all times, and order blocks are what we look to trade out of. And then weak structure. Weak structure is the most simple one. It's simply put that when price is trending, when price comes up and then we get the lower time frame confirmation that price is going down, well, that simply means that this low right here failed to be weak. And that is what we look to target for most, if not all, of the trades that we take here at Prosperity Academy. That is weak structure. Now let's go and apply all of these principles in a real life trade example. So here we are, GBP USD, the pair that I trade the most on the 15-minute time frame. Now let's monitor price action. Let's take us back to around about here. So first and foremost, market structure. Now if we zoom in for a moment, we'll understand that on the 15-minute time frame, essentially put, market structure looks something like this. Higher low, higher high, higher low, higher high, pull back, higher low, higher high, not a lower low. For us here at Prosperity Academy, we need a body break above the high for that to be a continuation. So essentially price a reversal, So price liquidates the lows, collects orders of demand, and then puts in a new higher high. So we know now that we are bullish. We are trading from this low right here and this high right here. And the break of structure comes from here. So that is our break of structure to the upside. So step one, understanding market structure. But if we play price out, what happens? Market structure breaks. And the first change from bullish to bearish or bearish to bullish is called a change of character. Imagine character being the way that the market is going. Bullish is one character, bearish is another character. So a change of character is the first sign of a trend reversal. Once we have a change of character, what we need to see is a mitigation of the supply and then a continuation. So we need to see something like this. So play price out, price taps in, and then we have another break of structure like this. So now we have completed step one. Step one is market structure. We have now had a break of structure, a change of character, and a break of structure. So we are now trending bearish. So market structure is done. Great. Now we can go on to liquidity to take. Well, look at this example right here. Is there any liquidity to take? No, there isn't. There is no liquidity to take on the way back up here. And to be quite frank, the area of supply right here has not taken any liquidity. So if no liquidity has been taken, what that means is that this area right here is the liquidity. This is our buy side liquidity inducement. So what we would be looking for at this point is for price to come and take out this high, and then let's see what price happens. Price pulls up and then we take out the highs. That is essentially a liquidation. So now we have number two, liquidity to take. Liquidity has now been taken, followed by what? Another break of structure. So we are continued to go bearish, and remember, we haven't broken with a body, only with a wick. A wick is only a sign of liquidation, not a sign of a break of structure. So there is our break of structure down. Why? Because it's closed with a body. That is our confirmation that we are going to continue going down. So now we have liquidity to take completed. We have our market structure is bearish and we had our liquidity has been taken. Now we want to look at liquidity to target. Well, what do we know? Weak structure and liquidity to target are actually the same thing. Because what's happened here is the buyers that have entered the market because the highs have been broken, breakout buyers had their orders open in here. This is where they had their buy stops. So they had liquidity here in the form of buy stops, and they probably had their stop losses under the most recent low as stop losses. So that is also liquidity. Now look at what we've done. We've taken out the liquidity here And then we've taken out the liquidity here. Now, what's interesting here is that now we have triggered in the sellers. So now we have triggered the sell stops. So now the sellers are in the market. And now we have the sell side liquidity has been taken. So liquidity has been taken. So it's likely that a lot of traders will probably have their stop losses above the high if they're smart. But if they didn't have their stop losses above the high, maybe they had their stop losses somewhere along this area here, that is essentially going to be another form of liquidity. So there's liquidity so much in this area, but most people don't understand it. And actually most people miss liquidity, but it's very, very important. It will make you not get into trades like this, and in fact, get into trades like I'm about to show you. So now we have liquidity to target completed. Our weak low down here is also our liquidity to target. So now we need our order block. And for us, the order block is going to be this wick right here. This is the buy to sell that liquidated and broke structure. Those are the criteria that make our order block a strong, highly probable point of interest. So now we have our order block. Now what we need is for price to return back into this area so we can look at number 5, lower time frame confirmation. So just as we explained when we were looking at market structure in a fractal nature, we can see that the 15-minute time frame is bearish. However, when you go to the 1-minute time frame, it's likely that you will look at price action, and actually price action is bullish. You can see here we had a low, a high, a lower low, and a break of structure. So this right here, just as I explained before, is a change of character. And that change of character, because it's a lower time frame, explains to us that the higher time frame is now coming for a pullback. And where are we expecting price to pull back to? Right up in here. So price, higher high, higher low, higher high, higher low, higher high, lower low. Relatively equal highs, relatively equal lows, relatively equal highs again. So look at what we've just done here again. We've actually created a range. Now usually a range is a large form of liquidity. This is how it works. We've created liquidity on both the top and the bottom of the range. And here's how a range usually works. Price will build liquidity on both sides of the market like this. We have the buy side liquidity and the sell side liquidity. Now what the market will then do is trap one side of the market first. Because let's say people have sell stops here or buy stops. They're waiting for the breakout to play the continuation. Well, what happens? Price comes down, triggers in the buy stops, and then because now it's taken all the buyers out, it melts. And that is what we call a range created liquidity inducement trap. This is something that you will see everywhere. Pay attention. So now we've created more liquidity to take, and we've created liquidity to target. Now we are inside of here. We need to look for a reversal, because right now, higher low, higher high, higher low, and higher high. Right about now, the 1-minute time frame is in fact bullish. So we need to wait for that 1-minute time frame to change bearish. And there you have it. There is our lower time frame confirmation, change of character, down. Now we have two areas. We have area number 1 that we could look to take the trade out of, the supply level in there, and we have area number 2 in here. But pay close attention to what happens here. As price starts to build, you can see that price starts to do what? Price has now created liquidity just before our point of interest. And these markets are fractal, meaning that what happens on one time frame will happen on another because it's algorithmic, owned by the banks and institutions that operate this market. So now we have liquidity to take again, liquidity to target. Okay, so now we know that this right here is our supply zone that we're going to take our trade from. Where are we going to take our take profit to? Well, let's just zoom out and take a look at what the external swing points look like. You can see that price was low, lower low, higher high, lower low. So we are ranging from this high to this low. And now we have broken structure. So what are we expecting? This low right now is weak because it failed to break this low. And that is the final piece of the puzzle, weak structure. So we target that weak structure for our full take profit of 22.29 risk to reward. And we just let that play out. If you guys found a lot of value from that video, please don't hesitate, subscribe and drop a comment down below what video you would like to see next. And if you would like to learn more about how we do this in more depth than we showed you today, then apply link in description to work more closely with us.